was in repeat, and the consensus is somewhere in the 30 to 35 years of the same day, while some people have argued thousands. Harold Ramis saying that he had kind of thought, directed the film, kind of thought it would be somewhere in the 30-year zone, which kind of makes a little bit of sense. But 30 years of the same day, no thanks. All right, well, we've been doing the same thing over and over again for 30 years in the equity markets, so what's it matter? Here we sit right now watching the market tick a little bit higher. Russell 2000 getting some traction. That's the big one. Same story, same thing. Bitcoin telling us about the state of liquidity, telling us about the plumbing. And once again, yesterday, the big story, people are trying to make a little bit of sense about what's going on. Key thing is that you have a headline risk, right? You have a headline story that transpires, and you have people who are looking at all the different types of software that are out there. Thomson Reuters got beat up pretty bad yesterday. Legal company, right? Well, that's because the story goes Anthropic added a new AI legal tool, and anybody who's in that space that gets beaten up, and that impacts the software companies, and there's deep concerns about the valuations. And a lot of these companies that are in these software spaces are typically unprofitable. They're trying to grow aggressively, and AI is effectively knocking their long-term growth strategy out. Now, that impacts a lot of midstream, mid-level, mid-tier investing in private credit. And that has been one of the core drivers of the issues happening within the broader lending markets, because the question is, how big would the defaults get if private credit continues to weaken? But all at the same time, that becomes the headline. That's what was on CNBC this morning. That's what they were talking about on Bloomberg. That's what they're talking about internationally. And they're not paying attention to the real elephant in the room, which remains the same story over and over again. The United States, U.S. dollar, continuing to strengthen against Japan. And Japan has done yet another intervention, but to a different way that most people think, not about their currency, but another $700 billion in yield curve control and $250 billion in direct lending. I've got questions. It's a lot, but this is all about plumbing, and this is what, again, has been forecasted and was discussed, and we've been talking about it for months and months and months, and we're just living through it. So all we can do in this environment is react, be cautious, watch momentum, know when to play defense, but it's kind of getting old, is it not? Let's pick a direction, everybody. Momentum is negative. And it's interesting, that our Russell figure continues to showcase some strength, but the reality is we're just not there. We're just not there on the strength side at the moment, something that can take us to 280. That's the kind of thing that we're really looking for, strength. And the reality is the last couple of weeks has been defined by a lot of these software companies, a lot of weakness in places that a lot of people aren't looking. So our intraday number looks okay. We still are hovering above key moving averages, but it really is about the possibility of a reversal in the broader markets, particularly in the lending space. Places like CD, right? Change digital holdings, a lot of crypto holdings, looking at names like Lending Tree, questions about direct consumer lending, the buy now, pay later model. All of this stuff continues to face pressure, and that is all in many ways linked back to private equity, private credit. The story is not going away. It's not going to go away, and it's probably going to be in our lives for the better part of the next 18 to 24 months. So get used to it and know it. Live it. Know it. Learn it. Forget the quote, Fast Times at Ridgemont High. S&P 500 momentum breaking down negative. This is being fueled largely by technology and financials. Technology has not been strong at all for, we got to go back into October if we're really going to talk about it, but the real break started back on January 13th of this month. You can see the TECS, which not a lot of people pay attention to, but TECS inverse ETF on technology breaking higher. And of course, Secret Agent Charlie, our favorite, the FNGD, continuing to showcase weakness in the Magnificent Seven and those top tier stocks. This is leverage. And this is one of the reasons why, if we look at the groups and see where stocks have been behaving, for 1 week, we're down 5%. We're down on the month. Year to date, technology down 3%. And remember, that has been the core driver through the top of the liquidity cycle. Now what are we seeing is that big rotation. And it's in materials, which is Trump related. It's in energy, which is speculative and stimulus related. And it's in consumer defensive, which we've discussed. You have the defensive names, you have the industrial names, the Lockheed Martins of the world, but it's also going to start to show up in the consumer products as well. We talked about that with Blake 2 days ago. If you missed it, go back and watch the archive. So here we sit right now watching what is really the beaten up world of the AI trade. Another guidance miss, and this goes back to the infrastructure spending. This is AMD taking it on the teeth a little bit this morning. And it matters because all of those, we're down 10%. It matters because all of that optimism is starting to unwind. And we have to just continue to witness that rotation into those top names, into the materials, into the energy, into the defensive. Don't tell us that we haven't been talking about it, because we started really talking about it at the top of that liquidity cycle in the late Q3, early Q4, October, which is perfect timing. This is a slight dip in revenue forecasting, rekindling doubts about AMD's ability to compete with Nvidia and AI. Sure, whoop-de-doo, but did beat on the top and bottom line. But this is a reminder that it is not about, when it comes to earnings, about speculating on the EPS and the whisper number. Guidance is what is driving this market forward, particularly at a time where there are deeper concerns around capital, around refinancing, around bigger macro things that are outside of the control of this industry. So once again, guidance remaining the question, overall expectations moving forward. Nvidia, this is not going away either. This is the more bifurcation issues in the future. How is energy not polluted by the AI trade? Well, energy focus has been a combination of a few things. It's a lot of oil and gas focus, a lot of midstream, a lot of nuclear, but the core thing remains within the CapEx build out that has been the major problem and the major challenge moving forward. All right, so NVIDIA, AI chip sales stalled by new security review. Remember, we are in the middle of a battle right now, soft cold war, whatever you want to call it, on AI, and China and the United States continuing that acceleration toward major splits in how the world operates. Ray Dalio came out the other day and said, we are in the middle, we're on the verge or on the brink of a capital war. Now, I'm not going to break down what a capital war is, but basically we are already in one. We've been in one through at least 2016, and it accelerated in 2022 when we cut Russia out of our reserve system. Well, this is another impact here, right? This is where the question is, it's not about capital wars are much more problematic than trade wars are, but the trade war showcases that China and the United States continue to escalate against one another. Chinese customers are not placing orders on those H200 chips. Very important. Meanwhile, that double whammy for NVIDIA, OpenAI seeking alternatives. That was the news yesterday after they balked on that $100 billion number the other day. And China sales are now stalling as well. So key growth market security overviews, a lot of OpenAI. This cracks that moat narrative that we have been talking about for quite some time, going all the way back to NVIDIA 4D. And here you sit right now at that 100-day moving average. That has to make me feel a little bit nervous, because if this really starts to crack again, it moves, and it moves very, very quickly, particularly in negative momentum environments. Key thing to be paying attention to right now is really not just trying to trade it with options. Remember, you have lots of different types of ETFs that exist that just can trade to the inverse side, and this one is a leveraged one, the NVDS. It's something that you can trade on with day trading, looking for swings and motions and moves through the day. You could do quite a bit with a $2 move on a $28 equity and trade this back and forth. If you do try to go long for the short term, remember you have the NVDL and the NVDX, which once again, pretty solid move, 15 up to 1575, 3% moves with some of this stuff, including options on it as well. It's going to create some interest. In addition, we have zero date really kicking off this week. So we have to be watching a lot of interesting price action, watching how the impact of zero date affects these equity prices and how broker dealers and market makers are behaving as well. First week of experimentation on this. If you have not listened to Don talk about zero date, today is the day to do that. Pay very close attention to what he has to say about options flow and about what expectations are moving forward in terms of volume increases and overall volatility and expectations. Software bloodbath yesterday. I talked a little bit about this at the peak of the show, and the core thing here is, look, there is a lot of pressure on software as a service, and I'm going to explain to you that this is not a situation where the impact is gradual. It's not gradual, what transpires in this environment. AI is an exponential gainer. And what do we mean by that, right? I want to give you a real quick visual of what AI does in terms of its impact on an economy, on workers, and everything else. And I'm going to tell you right now, we are very early in this game. The concept of exponential is pretty simplistic. You go to an NFL game. The kickoff happens. And at the beginning of that game, somebody takes an eyedropper of water and drops one drop on the middle of the field at the 50-yard line. At the minute 2, they drop 2 drops from the dropper. And minute 3, drop 4. Minute 4, they drop 8. Minute 5, they drop 16. Minute 6, they drop 32. And you keep doing that. By the end of the quarter, you've got basically a puddle across the entire field. And by halftime, you're pretty much 2 feet underwater. 2 feet across the entire field. By the end of the third quarter, the stadium is nearly underwater. And by the fourth quarter, you have created the Mariana Trench with goalposts at the bottom. That is what exponential means. That means it gets more powerful over time. And every 6 months, we see these exponential leaps. So it is getting 4 times more powerful than where it was a year ago today. This is the thing that is going to scare the hell out of the private credit market, because the private credit market has an immense amount of capital linked up in all of these different software companies, from cybersecurity to AI legal to things that just make PowerPoint presentations. You can make a 10-page PowerPoint presentation off of one article using Claude today in about 3.5 minutes. It took hours of one person's work. One article. You take one article. You take something from Zero Hedge and you just say, here, make me a 10-point presentation. It'll be done in 3 minutes. It's going to be done in about a year in about 25 seconds. That's where we are. So just be aware, things like Adobe, things like Intuit, taxes, things along those lines, this is all going to continue to face massive pressures. And these are businesses that are already, many of them, particularly the startups, losing money. Some of them may be legacy businesses, but unless they pivot or they find a new way, these are the types of tools that are going to knock these things out. And we could sit here and we can have our heads in the sand and we could sit here and say, no, this time is different. But the reality is we already have so much evidence of what technologies have disrupted the world, and the people who did not get on board with them, well, they failed. And the easiest example of that is coinage. The very beginning that we had coinage, which enabled trade, there were empires that refused to engage in coinage. They disappeared. It's 9 o'clock. We're going to keep going before we jump into the runner. I do want to just mention that gold and silver are back. They're back, baby. Woo! 91.20. And we're back in the frenzy, and we remind ourselves that we saw one of the great manipulations of the market on Friday. A lot of those banks that were engaged in paper losses, remember the entire way that the structure of the entire system has worked. Well, forever, banks were just selling way too many paper contracts on silver. And nobody was demanding physical delivery. And then China and India were saying, hey, why don't you give us that silver? And then, as all these other groups were effectively underwater, we are now seeing a lot of these banks. Well, there's not a lot of concerns around some of these banks this morning. So the resumption of trend has restarted, silver continuing to move higher. And I'm going to say it right now, I think we're going to get to 100 within the next week. I don't see any reason it won't because, again, the spot prices internationally remain very, very strong. And gold's back above 5,000. The entire thesis that I laid out about Kevin Warsh, that was all convenient. It was all convenient for people to talk about Warsh. That whole story was in the paper markets themselves. Central bank buying, ETF inflows, geopolitical hedging. It's all right there. And I'm going to write a story today about the Central Bank of Germany. I'll probably release that on Friday. Basically, they're 80% now on gold. 80%. And 37% of their gold is here in the United States, the New York Fed. What do you think the next major debate is going to be? And for me, it is the argument of whether or not central banks should be keeping their gold here in the United States. And if that gets noisy, oh boy, that will be another major geopolitical speculative leg up. Your bright side on the tech side is SMCI. And as I've talked about this time and time again, Scott and I have, this company is still a freaking mess. It's a total mess. It's highly speculative. But I will note this. All you got to do is trade it on the right side of the 8-day and 20-day moving averages. We have popped back above that line. We'll see if we can continue any momentum. But right now, I will just note, this is probably going to be something to fade. You had a nice pop. Watch that adjusted level. If we roll back down, this is a volume-weighted average price trade. There's going to be a lot of action, I think, on this name today. Some profit taking when we start the morning. Technology stocks remain negative. Computer hardware, software stocks under some pressure. And AMD, of course, that's the bigger story than SMCI. Shutdown ended. We're going to get our jobs report. We should have already gotten our ADP numbers. I haven't seen them. Where are we right now? Jobs. What we got? Private payrolls, 22,000 people. Okay, 22,000 jobs. Not good. So, once again, this puts the focus back on the Fed. And do we start to have a lot more chatter about interest rate cuts? Well, we're going to get the official non-farm payroll next week. Look, we saw a little bit of a move. Ooh, look at that. That's exciting. Odds of a rate cut. Haven't done anything. But we go out into that April meeting, and we look at the June meeting. June is where the highest expectation for a rate cut will come. We'll see. All right. The run-up. So I'm just going to say this. We chatted about this, 22,000 ADP. Yep, not good. Hey, I'm going to just tell you now, if you're going to do anything this year, if you want to get away from the wild speculative moves and you want to have to stop having conversations about the Magnificent Seven, which would be awesome, by the way, I am so tired of talking about Google. What do I want to talk about? I want to talk about real stuff. I want to talk about real assets, real things that matter. And as this market is already telling us, it's telling us that real stuff is where the market wants to pay attention. This is where retail investors and institutions and sovereign funds, they're telling us right now, hey, dum-dum, wake up. Materials, energy, consumer, defensive, and industrials are leading the way for a reason, because we are in the middle of one of the biggest geopolitical shifts since the early 1970s. So what does that mean? It means that the trend, the story, the hedge of tomorrow conversations that we've been talking about, and we'll dig into that today at 3 o'clock, what I mean by hedge of tomorrow and what I mean by sovereign strategy. The things that matter, the things that we've ignored since the 1960s are heavily in vogue again. And what we mean is, look, it's the metals, it's the materials, it's food. It's basically everything that Japan started hoarding in 2005, and everybody just put their head in the sand for 20 years. And now we're so far behind. Oh, yeah, we do have a ton of resources, don't we? We are a resource-rich nation. Maybe we should, I don't know, undo some of the work that we did in 1993 to reduce regulatory oversight and environmental oversight that has made it impossible to do major projects in the U.S. Maybe we should invest in foreign countries that have very, very strong freedom of economic rules. Scandinavia, Canada, Australia, yes, Canada. Go out to Alberta, look at Saskatchewan, look at the places where the agricultural growth is. The point is, you focus there, you focus on places that have less corruption, and you focus on places that have very resource-rich environments. These become places that there still are places to flip over some rocks and still find some value. And right now, we talked about Mosaic yesterday. Everybody's, this stock stinks. I don't disagree. But agricultural inputs and basic materials should be in focus. And AWM is back, and we've seen ADM make some pretty wild moves. But let's just go back and remember, it wasn't long ago we saw ADM make a monstrous move as a result of what was transpiring with Russia and Ukraine. And what my argument is, that was a preview of a longer-term issue, a longer-term trend. Now, ADM is a mess of an organization, as are most large agricultural companies. They are extraordinarily bureaucratic and slow-moving, but nonetheless, they own assets that matter. And the big question is, how are these companies going to become more efficient financially? They're going to have to. So right now, ADM, we're looking at it. We're seeing it on the hourly. And I like just the continuation of momentum that we have seen in ADM going back to the start of the year. Once again, consumer, defensive, farm products. It ain't sexy. I get it. But the reality is, if you're new to trading, these are some of the things that you should be focusing on, not trying to chase the wildness of technology, but turning inward and actually looking at how prices operate on a lot of these different names, because these stocks are still in many ways cheap. This stock right here is Cal-Maine. It is an egg company. And if you remember, the stock went ballistic in 2024 because of bird flu. But this is cheap, and it has cash, tons of cash. It has no debt. It's operating on the tailwind of GLP-1s, right? Actually true. More people who are on GLP-1s are turning to eggs as a source of protein because of protein need, and protein is not cheap. Eggs have become so again. So Cal-Maine becomes an interesting momentum stock in a way that most people would not think of it as a momentum stock. Optionality, cheap, very good way to trade, learn to trade around names like this and understand moving averages without waking up one day and having a stock fall 10, 15% because of some massive event that transpires over in Japan. It ain't going to be sexy, but it's going to be educational. And that's why it's going to be very important to be paying attention to this stuff, because this is where the real battle lies. It's in the commodity space. MP got beaten up. We've seen a lot of this focus in recent months. MP's been struggling, pulling back from that October high. I get it. But this is still a company down here, selling spreads, looking for opportunities in the metals and mining space, looking for ways to take advantage of ongoing support and strategic compiling by places like Japan, or forgive me, China and the United States. And here's a name that we know and love: Korea Electric Power. You know, it was really funny a while back. We were talking about the stock last year because it fit on the F and Gram score list. High F score, low Gram number, valuation very cheap, and yes, it's a regulated Korean utilities company. And people said, well, it's government and government owned, government involved, and I said, doesn't matter. It's a cheap company, well run, with extraordinarily low intrinsic value in a industry that has extraordinary demand due to AI. So KEP has been a solid momentum stock, and I just want you to add it to your list because when we tap off these 20-day moving averages, we can pull up the 50 as well. I think it is important to always have the 50 up, but once again, these become just slow burners. We tap above that 50, that 20, it becomes an opportunity to accumulate. We like KEP to the long side anyway. All right, let's go to the downside here. It is Super Bowl week, which means I already have nausea from the Svedka ad. If you haven't seen that, that will offend you. That is already in the running for the worst ad. I don't even know why they released it early so that people would provide comment. They have turned the comments off on YouTube for a reason. People have called this the AI Slopper Bowl. The ads will be heavily AI generated. It's going to be fantastic. That said, Mondelez, consumer defensive, confectioner, this is the GLP-1 to the downside story. There was some story, obviously, Pepsi in focus, MDLZ. You might remember that name. It came out. I forget where the split came from. But that said, Pepsi's cutting prices on Frito-Lay and a lot of their other junk food. That's what we're going to call it. Super Bowl snacks are the big game because you can't say Super Bowl without getting sued, apparently. But Mondelez, look, they're going to face pressure, as are a lot of the other snack companies as well. So MDLZ, consumer defensive, which is kind of where we operate. Remember, it's that GLP-1 trade that is an issue. You want to watch that 50-day EMA. If we break under that 50-day EMA, buy at that level, 57.50. Sell down at the 50 and keep a tight stop. WB. This is a shame. One of my favorite momentum stocks, but it's a short now. And as we know, with China, they're providing stimulus. It's not going into these names right now, unfortunately. And we are in a negative momentum environment, and we are sitting in an environment where there is pressure on global funding. So this is where you buy the 11 and you just try to let it run down. We may push down into that 950 level, or you're buying at the 1050 and selling at the 950. Momentum creates momentum. We have this negative crossover that happened here on the 8-day moving average and all of the other key moving averages. Doesn't have to be a violent move, but if we can get back down to around $9, this can pay pretty well. I love this stock as an upward momentum stock, but right now with the negative momentum situation we are in, we will be looking for more central bank activity. Remember, last time that we hit that low right here, this is where Japan announced hardcore stimulus, $117 billion in stimulus. Well, now here we go. We're widening off again. Again, another sign of weak momentum. Riot, same thing. Crypto selling off. I don't really know how much crypto has left. What about healthcare? Healthcare. Yeah, healthcare, I looked for a pop on Cure. It did not come. So, healthcare is kind of bleeding off a little bit. Let me take a look at that real quick. We didn't go negative on healthcare, did we? Hope not. Give me 1 second. That's going to load. We're kind of even on healthcare at the moment. Materials, energy, real estate. I didn't even think about real estate. Real estate looks pretty good, actually. This jobs report may very well, XLRE. It's not going to be shocking to see the XLRE get a little bit of a bump today if that jobs report offers any optimism about rate cuts. Riot, same thing. weakness in crypto, and I don't really have a formal expectation for how much lower Bitcoin can go. I think the guy that I follow was saying 75,000 over and over and over again, and we hit that level. So this kind of feels like a range for a little bit. But once again, this will come down to, this is a excess liquidity sponge, right? So this becomes something that people will potentially sell if they've got to raise some cash quickly. And then maybe, I don't know, refinance existing debt. AMD, you already know, is in focus. We talked about SkyWest yesterday. It's back. It's back on our list. Strong F score, low gram score. Good company. This was our record setter. We bought it at 17 in early 2023. We went to 123. Good name. PRU. Last one. What do we got? Prudential Financial. Ugh. Well, everybody's exposed to Japan, so good luck. This is just, again, another warning sign. We got to always pay attention to what's going on with these companies. Kinsale, what are they doing? Just chopping. AIG, chopping. Nothing. But that is the macro story. All right, just for the rest of the stuff for today, you got Google earnings tonight. That kid's killing it. Cloud growth trajectory, AI monetization. This is going to set the tone for the rest of the week. Obviously, they report after the close. Look for some drifting higher into today. If you're going to trade VWAP on this, have volume weighted average price out and also have a 3-minute chart up. You're looking for crossovers, green line to red line. That is the 24-minute and 60-minute. So if you do see bounces off of a specific range on volume weighted average price, one of the deviation lines, if you're looking to go higher, confirm it here with the 3-minute charts as well. CapEx spending will be a very important question for Google. We'll also see what they have to say, anything at all, about the president's statements on funding AI. We had ADP. We got the S&P 500 PMI number today as well on the ISM, so a lot of expectations. This is a key number here, 53.5. It's not a percentage. ISM is going to tell us whether or not our manufacturing is in expansion or not. If this continues to expand, that actually regenerates the concerns around inflation. We'll be paying very close attention to Treasury refunding. Fed's Cook is going to speak as well. We want to see what some of the auctions are today with the Federal Reserve. With the Treasury. We have to be paying more attention to that. I did say this one, and it was interesting because Novo Nordisk got crushed, got beaten up pretty bad, but the winner was Lilly, LLY, and this is going to be pretty good for the healthcare sector today. Huge numbers. Revenue up 43%. Who is not taking Zepbound, apparently. ABBV is the other name that we got to keep in focus. This is a very good company, but a lot of questions and concerns around applications for drugs and, of course, biologicals that could potentially threaten it. We got Qualcomm today as well. There used to be a time that everybody cared about QCOM. I don't know what happened. Google, same thing. You got ARM, and then, oh man, here he comes. One chair. Do you only sit on one chair? If you don't get that reference, just Google it. Look up Michael Saylor, one chair, and then once the acid kicks in, really, really great speech about whatever the hell that was. MicroStrategy, again, they will say, we're never selling our Bitcoin. Okay. There seems to be a battle behind the scenes here on MicroStrategy and some of the other banks and institutions. So that is a war of words worth paying attention to. Your headliners for the day are Google, Lilly, AMD, and of course, good old-fashioned SMCI. Eggs. Don likes it. Don's excited. Don's coming up in 10 minutes. Everybody, I hope you have a great trading day. If you have questions, I know we can move quickly, try to figure out ways to slow this down. I'm packing a lot of information in 35 minutes, but I appreciate everybody taking the time, as always, to check in, join us, be a part of our community. If you are not a member of TheoTrade, We're going from 9:30 today until 4 o'clock as always, so please do me a favor. Click the link and join us. Name your price. Get in here for the first month. And as always, have a great trading day. I will be back at 3 o'clock to revisit some of our themes from this afternoon. Have a great trading day.